Hey everybody, I wanted to do a JMIA follow-up. So on the 24th of March, it's April 4th today, on the 24th of March, which is somewhere around right here, I posted this video. Now when I posted the video, as soon as I hit post, I realized that I had left something very important out. So what in the video I was talking about was support and resistance lines. What I left out was, as soon as I posted it, I saw, oh shit, this is a head and shoulders pattern, and I didn't mention that in the video. What's a head and shoulders pattern? It basically indicates that the stock is moving from a bull run to a bear run. Why? Because we hit a shoulder right here, which is a new high. We pull back where we stop at this line, which is a support line, but in the head and shoulders world, it's called a neckline. So it hits this neckline or support, then it moves way higher. So it continues the run, hits a new high, levels off, and drops. Where does it go? Well, if we're thinking that this is going to set up as a head and shoulders pattern, it's going to go to its previous neckline, which is right here. Then it's going to pick up a little bit of steam, and if it is, again, a head and shoulders pattern, it's going to go to our previous shoulder, which is right here, before stopping and reversing. So it's high, high, low, a little bit of a high, and it's losing momentum. So it's like a last gasp breath at a little bit of a rally. But when we notice this, it connects here, uh-oh, this is the head, these are the shoulders, this is the neck. The theory is that this stock is going to break this support line, break the neckline, and drop. Where could it go? In theory, all the way to its previous support line, which would be down here. Doesn't mean that it's going to, for all of these people who on my TikTok page go, technical analysis doesn't work 100% of the time. Yeah, what else works 100% of the time? Taxes and that you're going to die. Those are the only two things that are 100% guaranteed to work 100% of the time. You will owe taxes and you will die. That is it. Nothing else is 100% guaranteed. So for all the people who are like, oh, it doesn't work 100% of the time, nothing works 100% of the time, including your car. Your battery's going to die, including your big fancy college education. You might not be able to get a job in your field. It didn't work 100% of the time. Nothing does. So for those people, chill. Now, we've got our head and shoulders pattern, which looks like, so if you're looking for an opportunity to buy this stock and you see this pattern present, you might be saying, I'm not feeling it because it looks like a head and shoulders here. If it breaks this, I don't want to buy on this support line down here because this is a head and shoulders, which indicates a reversal from bull to bear. Now, it doesn't really happen. You can see it does break it a little bit, but the big sell-off never comes. In fact, it reverses and it starts to move higher, crossing this middle line right here in the Bollinger Bands, which is called the 20-day moving average. Crosses this 20-day, which is a positive sign, right? We're negative territory, negative territory, negative territory, and then we start to have a little reversal and we cross. This is not a buying opportunity. It's just a potential buying indicator. Oh, look, our head and shoulders didn't actually happen, and we're reversing. So the next thing we look for is a breakout to the upside. Yes, you missed out on this run from $31 to $34, or even $38 if that's what we closed out on Friday, $38. You've missed out on this run. So if you bought 100 shares at 31 and it's at 38 now, that would have been around a $700 profit that you missed out on. That's going to happen as a trader. You are going to miss out on some trades. That's okay, because the goal isn't to get every single trade 100% of the time. The goal is to wait for patterns to present themselves and move higher. That's what we're looking for here. So yeah, you miss out on this. Now, people are going to go, but look, you always talk about using the relative strength. Well, not all the time. That's why it's important to have a variety of different methods. So sometimes you want to use relative strength index to find a potential buying opportunity after the stock has sold off. It doesn't mean that it's going to be the one that you use 100% of the time. That's why you need to have multiple methods available. One of them would be support and resistance lines. The other would be relative strength. The other would be these Bollinger Band breakouts that you see all these little green arrows. These are all potential buying opportunities. You have to have a lot of them when you're going to make a trade. Not too many. You don't want to overwhelm yourself with like 80, or 10 or 15. I like to use just a few, right? Bollinger Bands, support and resistance lines, volume, relative strength index, and these moving averages. This yellow line here and this green line here. That's it. 5. And I don't use them every single time. So right here, yeah, we're not in the middle of anything, but if we get a breakout with some very strong volume here, that might be an opportunity for a quick trade. So where do I think this stock can go? I think it could go to our next resistance line, which is right around here in the 50s. So if I were to say buy the stock around 40, if there was a breakout here with very strong volume, my target price would be here. And then my next target price would be here. So what would I do? If I had, let's say, 200 shares, I would sell because I make my money. I pay my bills on these trades. I would sell the majority of my position right around here. Might not get to 50, right? It might get up to 47 and hit very overbought, at which case that's where I would sell. I'd sell at 47. You know, if it got to 50, whatever. And would I hold a little bit extra just for the hell of it to see maybe it could get to 70? Sure. If I had 200 shares, maybe I'd sell 150 here, and I'd hold my last 50 just for the hell of it. If it started to move higher based on the other technical analysis, we'd see. If it started to reverse course, maybe I'd lock in my gains somewhere here. Maybe I'd lock in my gains somewhere here. Maybe I'd wait for it to get all the way back down to here and, you know, break even on those 50 shares, still hold them, and buy back another 150 down here if it started to reverse and go higher again. If it started to break out to the downside and head lower, hey, maybe I would take a loss on those 50 shares. It really depends. I would prefer not to, which is why more often than not, I'm selling based on the technical analysis when we're entering overbought territory or we've had a huge run like this. I'm just saying, hey, man, I'm going to take my money. I'm not going to be stupid. Crossing your fingers and going, man, I really hope this stock goes higher isn't a trading strategy. This doesn't work. So we've got that. We've got our head and shoulders pattern that turns out to maybe potentially not be a head and shoulders pattern. It looks like it could be reversing, which means it could get somewhere, in theory, back up to around here. So we would look for a breakout on the Bollinger Bands as a potential buying opportunity for this example. Now, let's go back a little bit further. Let's pretend that we are in this area right here, which is around November and early December. Is there anything here that we can see that would be a potential buying opportunity? I mean, look, we have no idea this is going to happen. But is there anything that's telling us in this area right here, maybe we want to buy? Well, what I see right here, this little guy right here, looks like a bull flag pattern to me. Now let's look at this area right here. You can see multiple breakouts to the upside. But what you can also see is that this stock is way overbought. But again, relative strength index doesn't come into play on this particular trade. What we see is strong volume continuing to push this. Yes, it's overbought. It doesn't matter in this instance. What matters is that we are staying above the 20-day moving average. Let's zoom in. Every time we have a breakout, the stock is overbought, 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 overbought. But when it pulls back, where does it get to? It gets to this 20-day moving average as a support line, and it never breaks below. So in this instance, this would be buying opportunities. And this would be something that you could potentially do as a day trade. This could be potentially something that you could do as a very short-term 2 or 3 day swings. Buying, selling every time. Every time it has a big run, you sell. It pulls back a little, you buy. It pulls up a little bit. Maybe you buy on this day here at 26 and sell at 29. Stuff like that. But what do we see here? This kind of looks like, to me, a bull flag pattern. What's a bull flag pattern? Let's look. A bull flag pattern, actually, it would be better if we did this. A bull flag pattern is a straight up run like this, followed by a little bit of a pullback, usually halfway, and then it pushes higher. So what we look for when we're doing a bull flag, and I'm going to draw it for you, when you zoom in, this looks like a very weak bull flag. But I'm going to do it anyway in this video just to illustrate a couple things and show you. The way the bull flag works is we have a pretty strong run. This is the pull. And then we have this flag here. The way you make the flag is you connect all the highs and all the lows. So what you do is we're going to right click right here. We're going to add a drawing, and we're going to use this trend line tool. And we're going to connect all the highs. Then we're going to go from the bottoms, add drawing, and we're going to connect all the bottoms. I'm going to leave this candlestick wick out. And we're going to connect all the bottoms because the majority of the bottoms here stop on this support line, and they also stop on this resistance line up here. So when the stock has big rallies, where does it go? Hits resistance, pulls back. Hits resistance, pulls back. Hits resistance, pulls back. Hits resistance. You get the idea. The next thing we do is we connect our flag pull from the highest day all the way down here to the lowest day. And it should work. So this looks very like a sideways bull flag. It doesn't look as good. Like a better bull flag would be something like this. This would be a better looking bull flag kind of pattern. I don't know why it's not dropping when I ask it to drop. This is so annoying lately. What is happening? This would be a better looking bull flag, like a more straight up flagpole than this like lopsided shit, but it still kind of works. So I'm going to use it in this example. Now, if we jump back here, what do we look for in this bull flag? Let's say we are watching this every day, and we're looking at it going, hey, flagpole, flag, Now, you don't necessarily want to buy it here because we're just guessing again, right? Even though, look, it goes from 24 to 30. That's $6 gain. If you had your 100 shares, that's $600. Yes, you missed out on this trade. That is okay. Because what we're looking for is a pattern to present itself. And we get it right here. The way a bull flag pattern works is once you form your flag, you wait for a breakout to the upside like this. When it breaks over this resistance line, bull flag. So where do we think the stock could realistically go now? Do we predict that just because of this pattern, it's going to get all the way to 70? No. The way the bull flag pattern works, and again, don't get mad at me in the comments, I didn't invent this. I'm just quoting what it would say on like an Investopedia or in some book. So the way the bull flag works is, in theory, this stock is supposed to go up after it breaks out the exact length of its previous flag pull. So if we do the math here, this stock goes from around $38, which is the tippy top right here, all the way from 14 or so. So if we do 38 minus 14, it gives us around $24. That is our flag pull length, $24. We are expecting that this stock will potentially have another $20 to $24 run. So where do we think that the stock could go based on $38? So if we take this breakout from here, which is around $29, right? Remember, we're zooming in. This is around $29. So at this, from this price point of $29, we're expecting that this stock is going to have a $24 gain. So 24 plus 29 puts us at around $53. That's where we're estimating our potential price target will be, $53 a share from right down here at, what was it, 29. 29 plus 24 is our estimate. That's our flagpole, was $24 gain, $24 run. We're expecting another around $24, which would put this stock at 53. Look at this, 50. That's pretty fucking close. $24 run, 20-something dollar run, right? 50 minus 29, 50 minus 29. Well, 50 minus 29. So 50 minus 29, because that's where our previous support breakout was, $21. So we were expecting a $24 run, and we got within $3 of that. That's pretty close. So this right here is another potential buying opportunity. Again, overbought on the relative strength, but we're getting the Bollinger Bands this time. So you've got a variety of different methods here. We've got the bull flag pattern here that's telling us that we're going to have potentially another $24 run. And we get a I wrote it down, $21 run. Pretty close. Then we get a head and shoulders set up here, a support and resistance line set up here. So we could say, in theory, oh, this stock is leveling off here. You're going to potentially miss this trade right here. It's going to sell off from here. You're going to lock in your gains, potentially here, right? This is where you would sell because you're expecting to have around a $20 to $24 run. So you get up here, you're locking in your gains. You're taking your profit and you're walking away. And you're going to wait now for this stock to do something else. And what it's going to do, you don't know. But what we notice is it starts to set up a pattern. Look, resistance, support, resistance. It drops a little and then it runs. Then it dips. Then it hits that previous support. Then it hits resistance. Then it hits support. Now we recognize the head and shoulders. So what we expect right around here is, this thing is going to tank. If it doesn't tank, this is not a head and shoulders pattern. It's just a weird looking thing on a thing, and it's going to go back up again, potentially up to here. That's what we hope, at least. That's why we use a variety of different methods here. We use a variety of different things. Support and resistance lines, Bollinger Band breakouts, relative strength, bull flag patterns. We use all these things to help us identify potential trades. Are they 100% guaranteed? No. Here's an example of it potentially not working. This was looking like a head and shoulders where it would indicate a reversal and a dump. It didn't happen, so it was wrong here. That doesn't mean the technical analysis is going to be wrong 100% of the time. It just means in this instance, it didn't work. Your car is not going to start 100% of the time. One day you're going to get in and your battery is going to be dead. You know what I'm saying? So there you have it. I hope this video was helpful explaining the importance of having a variety of methods to trade with. Not just using the one, not overwhelming yourself with too many indicators, and understanding that sometimes things are going to work and sometimes things aren't. And also to have a couple of different methods at your disposal. Stuff like bull flags, which presents here, support and resistance, Bollinger Bands, relative strength. There you have it. I'm going to edit this video. I'll get it up later today on Sunday. Thanks for watching. If you haven't yet subscribed, please do so. Thanks for watching and have a good day. I said thanks for watching twice.